this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Learn how to not pay more starting right now in 2024, folks. That is the campaign slogan that many of you have come to the harsh reality by first starting to understand the retirement tax risk road you're traveling by taking advantage of the free resource that we can provide to you at retirementtaxcalculator.com. A number of you have taken advantage. Again, that's retirementtaxcalculator.com. And I think about a couple people we'll talk about here quickly because I really want to kind of hit home with real clients and real scenarios that many people just put this off and they put it off and they put it off. And the question I would ask you is if you wouldn't put all your eggs in one retirement savings basket, why would you keep or put all your retirement savings into one tax basket? Let me give you a couple examples here. So the tax sale with the Tax Cut and Jobs Act is about to sunset. We have 2 years now. I've been counting it down, and now we're down to 24 months, folks. So learn how you can stop paying more or learn how to prevent paying more by learning what you can do right now in 2024. So the Tax Cut and Jobs Act alone, this is where all the brackets are going to jump up about 3%, and every joint filer, every couple joint filing are going to see another $15,000 of taxable income because the deduction for the standard deduction is going to be cut in half. And that's going to impact a very high percentage of us that don't itemize. But here's the real kicker. Those having incomes between 40 and 500,000 will see their taxes go up anywhere from 11 to 15%. That's based on the Peterson Foundation on tax strategy. Americans are now paying more now listen to this. Americans are now paying more in gross interest at a record on $34 trillion of debt than on our national defense. And they said, who holds the IOUs? Well, folks, if you've got an IRA, is your IRA an IOU to the IRS? Because I would tell you, if you go to retirementtaxcalculator.com, you're going to see very quickly, and I'm going to give you a couple examples here as we go through. But if we've got $2 billion every day being just spent on interest, and again, this is according to Peterson's Foundation that does a lot of a study on the real math, the reality, not this hidden media agenda of not giving you the real numbers. I want to talk to you about, that there's a big warning sign here. With more than $10 trillion of interest costs projected over the next decade, this compounding fiscal cycle will only continue to damage our kids and our grandkids. So whether you're within 5 years of retirement or less, or you're already in retirement, or one spouse is, one spouse isn't, it's never too early, it's never too late to get a head start to be sure you're being tax smart on learning, right? How much lower your taxes can be, right? Learning how to not pay more, avoiding how to pay more by learning in 2024. Let me give you a couple examples here. We talked about on Hidden Wealth Radio this weekend, debunking the retirement myths. And the first two myths are you stop paying taxes in retirement and you'll be in a lower tax bracket in retirement. Well, folks, remember, when the 401k was created, where most of us did our saving, right? This is when tax rates were at their highest, were 70%. So, of course, you would surely hope that you would be in a lower tax rate by putting money away at, say, upwards of a 40, 50, 60, 70% tax rate that you could defer so you could get it out, let's say, at a 20, 30% tax rate. But here's what I'm going to tell you. From all the things that we're hearing, for those that have been, again, not for everyone. For those of you listening that are strong savers in IRAs, 401ks, maybe you're still working and you're a high income earner. And I've talked a lot of these case studies, and I'll keep giving them to you. I'm going to give you two here as we close. The tax is a multiplier beyond what your balance is. I talked about last week with Mike. Mike will pay $1 million more in taxes than what his current balance is right now, and Mike's in his mid-60s. He may have another 30 years to live plus in retirement. So if that compounds even more, that $1 million more than what his balance is could be $2 million more. And he could save $3 million of tax over his lifetime, tax on his IRAs, tax on his Social Security, and tax on his Medicare. These are things, as people realize, and I'll teach you this Tuesday at retirementprotected.com. That's a complimentary log on and learn educational webinar where many of you have said, wow, I've listened to this and I finally took the time, especially for those of you that are in this season of having kind of this retirement tax New Year's resolution of saving, especially as we're coming into this tax season. Folks, it's a harsh reality. Let me give you a couple of examples. Story of Dave, protecting last names, of course. On course to pay 4 times the tax, his total tax will exceed, right, what he could pay in tax today. So in other words, he could pay a little bit of tax doing what we call strategic Roth laddering of conversions, or he and end up saving 4 times what he's going to give up in what he could avoid giving up in taxes. Or he could actually just learn a strategy I'll teach you this Tuesday that you can use a deduction for those that qualify, and Dave does, that allows a deduction to offset the conversion tax, so you don't have to come out of pocket to get your money untaxed and get it insulated from the IRS and from obviously on our income and our assets for our children's inheritance. Well, here's the last story on Stephen. Stephen is in his mid-40s. He will pay 3 times more in taxes than his total balance of what his IRAs or his 401k is today. He's got about $880,000. He's been a strong saver in his mid to late 40s here. But he will pay, and listen to this, 3 times more, right? Now, thinking about this, he will give up $2.9 million in taxes, folks. $2.9 million in taxes versus if he just did it to the traditional way, and he already qualifies to do it the strategic way. But if he does it the traditional way, he could get away with giving up $352,000 of tax, which nobody wants to give up any tax, I realize, to avoid giving away $2.9 million of tax. And that's if tax rates don't balloon. So I want you to think about it. If we're paying $2 billion a day on our interest, this administration is looking for $30 trillion of new taxes by 2030. I want you to really ask yourself, don't you want to learn how much lower, right? How much more you can avoid to pay, right? Right now. Folks, the time to learn how to not pay more is taking the time to go to Retirement Tax Calculator. Again, retirementtaxcalculator.com. It's a free resource, folks. In under 30 seconds, you can see the tax risk road you're traveling. Learn how to pay, not pay more right now in 2024, and then attend the educational webinar where I'll teach you proven strategies with a track record of measurable results, what your friends and neighbors from all around this country have done, saving hundreds of thousands of taxes a year, but adding how to best strategize when to file for Social Security, when's the best time to do Roth conversion, and don't fall for the typical status quo of what everybody else is listening to, because unless you have a strong acumen with planners that work in the area of transition. It's a transformation going from the accumulation phase, folks, to the preservation phase, and actually have a tax team that backs up the strategies and they're in sync with one another. Learn how much more, right? You learn how much more that you can avoid paying in 2024. Retirementprotected.com, retirementprotected.com.